Good morning, traders. Steve Gans coming to you from Park City, Utah today. On a little family trip up here into the mountains where it's a little bit cooler. I think you can probably see that beautiful clouds coming up and sun coming up behind me here. Anyhow, one of the reasons that I trade the way I do is because I can come and do things like this and don't have to be glued to my screen. So I will, of course, be checking in the morning, checking in as we get close to the market close each day, but I don't have to be involved in between, so I can be out doing some other things. So anyhow, for our review here today, the first trade is this 628 trade. This was a long fought battle. A lot of adjustments in this thing we can see here. This is the summary of that trade. I can blow that up here. The opening of the trade, then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 adjustments, and then the final close of the trade. So again, that is abnormal to have that many adjustments in a trade and then still eke out about a 10% profit. So that was certainly a challenging trade, but one that is now in the books and was able to be worked into profit over a period of time. Now, the rest of the trades that are open, we'll take a look at those. So these are the current open trades. Obviously, right now, this FedEx one is taking some pressure. I know FedEx has kind of, my line in the sand was around this 300 mark, and it was balancing right at that 300 point on Friday. I decided to leave it alone, see what Monday brings. I'm looking at a couple of possibilities here. One might be to add in a put spread. Another one might be to simply close this, roll it out a little bit higher, maybe roll it up from 295 up to 310, something like that, and then maybe add a downside put spread into it, turning it into a condor. But I want to see the range that it's likely to trade in here first. So that's what's going to happen here on FedEx. The trade is cruising along just fine. It's in a great zone. There's a GTC order out there to thin this out a little bit further. And again, some nice profitability in that trade. It's in a good position. The QQQ trade, again, very nice profitability. It's been thinned out so that it's currently in a no-lose status. So no matter what happens in this trade right now, in its current configuration, if the market were to rip up, we're at least going to have a approximately 40% gain. If the market were to tank, that might only be around a 20% gain. If the market chops back and forth here in the middle, might be able to squeeze some more out of this, maybe get this up to around a 50% profit or so. So I'm going to be looking to just continually maybe thin this out. There's only 5 days left in it, so this is going to start to decay fairly rapidly this week, and that's what I'm looking for, is to be somewhat range bound here and have that decay happen. This new trade that was opened on SPX out in August, this is playing out perfectly. Again, chopping back and forth. We have very little upside risk. There is some upside risk in this trade, but it's very little amount of upside risk. If our market does move up from here, I'll end up adjusting that out by raising this right wing, which will add a little bit of risk in here on the lower side. That's one way of doing that. There's a few different ways of doing that. Another possibility might be to sell a call spread out here somewhere if I feel that our market is unlikely to break a certain point. However, we'll see when we get into looking at some charts that I'm not so sure that I can pick an upside area here. And again, we'll look at that in a moment. And then, of course, there's the FTNT trade here, the wheel trade, which is chugging along just perfectly. This has another week or so on it, and then I will roll it out to the August expiration and see what additional premium I might be able to pick up on it at that point. So that's where we're at in our current positions. And now I want to take a look at the market itself. So if we look at RUT is just in that range that I was expecting it to stay in here from the 2000 up to around the 2100, and it's right smack in the center of that range. So I like that's playing out how I would have expected here. I'm not really thinking there's going to be anything dramatic that's going to change this over the next 20-30 days. So I may very well look to add a RUT trade into my mix. coming up here this week or next. We do have a holiday this week. Thursday, our markets are closed. So I'm not sure I'll end up doing that this week, although I may look to add a calendar in. You remember about a week ago when we had Juneteenth, or a couple weeks ago now, we had Juneteenth, and I did a calendar that spanned over that holiday, then the long weekend, and that decayed nicely while the markets were closed. I may look to do something like that again this week, possibly on Wednesday. We'll see what our markets look like at that point. This is going to be a very light trading week. A lot of the traders at Wall Street are out for the week, particularly given the holiday in the middle of the week. We'll see how all that plays out. Let's take a look here at SPX. As you recall, last week I said that I might expect SPX to pull back a little bit. We've got a pretty solid uptrend line in place here that I might expect a little bit of a pullback, possibly down to the trend line, and then a rally higher. Well, we pulled back, not quite to the trend line, then rallied to all new highs, and that was on Friday. We gapped up this open, then sold back off, didn't quite come down to the trend line. But again, my expectation is we could dip a little bit more into this trend line, possibly even a little bit below it, and then likely continue our rally, making new highs. So the reason that I'm not willing at this point to pick an upside area here to sell a call spread to raise the right wing of that butterfly I just mentioned is because when the market's breaking to new highs, it's really hard. There's nothing to define a top up here or resistance. So that market could run and run on you. And so I'm a little more reluctant to, again, go and add a call spread up there when there isn't any resistance to really mark where that might potentially run to. So that is SPX. Again, we'll take a look at SPY here because we got some volume on SPY. We can see that similar story here. Again, got this uptrend intact. This sell-off on Friday did have some fairly significant volume with it, which might indicate a little bit further downside. Again, but my anticipation is a little further downside right into this uptrend line, and then probably reestablishment back up to the high of this channel. So that's, again, my expectation on SPY and SPX. And then let's take a look at the Qs. And the Qs, very similar story. Just touched old highs here on Friday, sold off, back down, not quite to the trend line. A little bit of a peak in volume on that sell-off. Again, that might indicate a little bit further drop. And then my expectation would be a further rally from there. And then the final thing to take a look at here would be VIX. And volatility is back down at pretty much its all-time lows. So that also tells us there's not really any fear in the market right now. There's nothing that people are seeing out there that's freaking them out, that's causing them to buy protection or to buy puts. So that also is more of a bullish sign for the market. So when it's all said and done, I'm anticipating a more neutral to uptrend to continue after possibly a little bit of a dip in the market, pulling back to those trend lines. And again, probably a fairly quiet week here for the most part. Now, as we start getting into next week, I'll be back home in my office, and we're going to start getting into earnings season then. Earnings will start to pick up as we get later in July, and earnings season can get a little volatile as some of these larger companies are reporting earnings. So we'll take a closer look at how earnings are playing out at that time. So that's it today. So the big expectation tomorrow is looking at FedEx and seeing what's going to happen there and how I might potentially adjust that given the couple different scenarios that may happen. Again, if we get a little bit of a pullback or a sell-off, I will likely be selling a put spread that will bring some additional money into that trade, reducing the current risk in the trade. That's going to be one possible plan. If FedEx stays about where it is or maybe even rallies a little bit higher, the put spread may be a possibility, but the more likely scenario is maybe going to be closing the existing call spread, rolling that higher, seeing what that does for us, then potentially adding a put spread to that, turning it into a condor or a butterfly that's a little, higher up in value, higher up in the price of FedEx. So that's it for now, everyone. Take care. Have a great week, and I'll be back in touch throughout the week.